is approaching 56 past the hour. That means Bloomberg Television is on the markets. I'm Julie Hyman. So let's see where the markets stand right now, about halfway through the trading session. We still have a mixed picture with the Dow trading higher, but the S&P 500 and the NASDAQ trading lower. Of course, the S&P was at a record just a couple of days ago, but some of the earnings reports today have been putting pressure on the major averages. And let's talk a little bit more about not just the day's action, but sort of the bigger picture here. What have we seen in earnings thus far? What's going to get us to the next leg up in the market? I want to bring in Trading Advantage's Alan Knuckman. He's not in Chicago today. He is right here next to us. A little field trip for Alan. So,
Thanks
Alan,
for having me.
When you look at the action this year, we've sort of come full circle, right? We're pretty much where we ended 2013.
Right, but that was a huge extended move, so we're taking a little bit of a pause, and I know some people are nervous about the fact that we haven't extended these gains,
right.
But put in perspective, we're still sitting at the highs almost every single day.
And so are we going to continue to make new highs? We haven't made that many new highs.
Well, I think we've gotten very spoiled, obviously.
Yes.
Big gains last year. You probably can't expect that for this year, but the trend, the momentum is still very solidly up. Nothing has changed to throw my optimism off. The only thing people are afraid of is that we've had a big move and we're at these heights. That's not a fundamental reason. That's a irrational fear, I think, that the markets could fall down. I
mean, in terms of fundamental news, we're getting earnings that are not fantastic. Right, we had UPS really struggling through the holiday season with delays, incurring some costs from that. We had Intel come out with a forecast. It is struggling because of, I mean, these are sort of longer term trends, right? Struggling because of slowing PC sales. You know, Citigroup coming out and disappointing. So we have had some big companies coming out.
But I don't think struggling is a proper word. I think you're getting a little bit of hiccups, but the big picture, everybody's doing better than they had been in the past, and things are progressing and things are fine. But what's most important to me is how the market reacts. And even when we had that negative news, every time that we've had a sell-off, it's come right back and it's moved that measured move, the distance of the sell-off on top of the previous highs. And it's going to do that until it doesn't. So I'm still looking for 1880 in the S&P and then 1925.
And so what's your strategy then if you're relatively bullish? What's your best way to play the next up move?
Well, you've got to be very selective now because, you know, we've had so many extended moves. But I'm looking at distressed companies. I think eBay is a good example. It's gone nowhere, done nothing for a long time. Kind of like Yahoo had been or Facebook had been a year or so ago. There's a lot of these stocks that don't perform as does the major market. So I'm looking at eBay, been trading between 50 and 58, had a false breakout to the downside. eBay's a solid revenue generating company, kind of forgotten. If it gets back above 58, then it's going to 64. So I think there's some possibilities. You have to look at stocks that have gotten beaten up, that don't look good. Abercrombie & Fitch was a great example. From a risk-reward standpoint, you know, buying it against 50, it had a big bounce when everybody thought you want to be a buyer when things look the absolute worst, and you don't have to risk as much on the downside.
Well, things look the absolute worst. I mean, Abercrombie I happen to know a little bit more about than eBay, I have to say. And, you know, Abercrombie has a little bit of an uphill battle there.
And they do, but they finally had a stock bounce. Right.
And the stock bounce, but what about what's in the stores? I mean, that's going to ultimately drive the stock.
Well, I'm not in the stores. I'm in the stock market. Right. And so from a risk-reward standpoint, there was a level to lean on, a long-term support, and it bounced off that and had a nice, healthy move. So that's an idea of when everybody has a negative opinion on something, that's probably time to look at a bullish opportunity.
All right, we'll see. I'm going to check back with you on that one. Alan Knuckman, great to see you in person. Thanks for coming in. We'll be back on the markets again in 30 minutes. Bloomberg West is next.